Hello, traders. It is 8:02 a.m. Chicago time, 9:02 Eastern, on the 11th of September 2018. Remember, September 11th. It's been quite some time since 17 years, unbelievable, since the 9/11 attack, which occurred around an hour from now or so. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk is off. The DAX taking the biggest hit this morning. Not too bad. 94 points down 0.78%, followed by the Euro stocks. The Dow is down 121 points. The NASDAQ 35. Gold's also down. The S&P 500 is down 9 points. The leader this morning is crude oil. Crude oil's up 16 cents. That's it. 25 basis points in the October contract, trading 67.71. Fairly consistent session in the extended hours after yesterday's consolidation. Yesterday, I forgot to mention this, was Rosh Hashanah, a Jewish holiday. The volume was not as low as I would expect, but still relatively low, mostly a balanced day. We'll talk about yesterday's action in a minute. As far as what we're expecting for today, I mean, why is the market selling off? Not really sure. There's some stuff on China filing with the WTO, the World Trade Organization, to authorize sanctions of $8.4 billion on somebody. But overall, I'm not seeing any news other than the fact that Japan, the U.S. and Japan are starting negotiations over trade, and trade and Brexit are really in the center of all of it right now. That's the key risk I believe that the market is eyeing out. So that's where we are this morning. As far as what could interrupt our auction, at 10 a.m. today we have wholesale inventories. We also have the JOLTS job openings and wholesale trade sales. None of those are top tier numbers. So this morning, expecting this to run under its own power. Let's take a look at what we expected yesterday. Here are the two tracks that I put up. The key scenario is to open above the range, fall back through as far down as 28.7750. That's where I was looking for the market to find a base, and then to turn around and actually push up after we've broken the trend down, this channel down, push up, and I expected it to have plenty of power to rotate higher, but it didn't quite do so. It was fairly balanced. Scenario 2 didn't quite work out either. Where we ended up yesterday is really scenario 1 right here. Okay, so a little consolidation, a drop, a push into value high or 77.50, and then a turn up on the close, and then that's it. That's all we got. Very, very little to play with. Here's what actually happened. Let's clean this up a little bit. Opened one tick above Friday's high of 28.85. Opened at 28.85 and a quarter. Very clear open auction. So what does that tell us right away? It tells us that there's a high probability that the lower time frame traders are in control, at least for a short while. A lot of times open auctions lead to trends. But there is no drive, there's no repricing, there's no revaluation of the S&P minis based on the action that we saw in the morning. And then we saw this nice rotation up to 28.88 and a quarter, which I thought would be a nice trigger so I expected it to be done, consolidate, come into the prior day's range, done, get an impulse, pull back, and then continue, and then start working its way per scenario one. And I was wrong. Push up 28 and a quarter, 28.88 and a quarter, comes right back through, falls below the mid, back into the range. You probably can't see this very well, but remember to watch this in 1080p, okay? So set your YouTube channel or YouTube screen to see things in 1080p so they're nice and crisp. But look what happens here. We have this about the same impulse down as we do up. Pull back to mid. Mid is this blue line right there. Pull back to mid 3 times. Bang, bang, bang. And then off to the races we go. And then we end up dropping to 28.78. Pull back to mid again right there. And a nice little rotation gives us a double bottom IB stat. So the initial balance is the yellow line. 28.78 touch twice. The double bottom IB stat, historically 83% that it's likely to break before the end of the session. Past performance not indicative of future results. And then it pushes back up, which is kind of odd. Saw a really good opportunity right here, and then it ended up pushing all the way back through the mid. So it didn't look so hot to be short anymore unless we break below the mid and the OS low again. And then it breaks below, higher low, comes back to mid again, and then we finally get the range extension down into 28.7650. Remember, we're looking for 28.7750, and value high pushes into this value high, consolidates. Not the greatest low in the world. Traded quite a bit over here, and then started to turn back up to mid again, and then just consolidated. That's yesterday in a nutshell. I know that sounds like a lot, but really rotations, you could see here, usually I keep my chart at this bar width, and really there isn't very much in terms of the number of rotations for the session before we get to the start. It wasn't as active as it was on Friday and Thursday. So we ended up with a really nice taper at the top, a sort of a balanced Gaussian profile with a weakish low at the bottom at 76.50. And in the overnight session, well, I want to show you something. Yeah, the overnight session tries again for that 28.85. Remember, 28.85 comes to us. Well, let's just say 28.85 is sponsored by Friday's high, and it comes right back to 28.85 on the run up. So it looks pretty decent for the run up, and then Europe opens and the party's over, or there's a new party, and it's impulsive down, consolidates, and it's holding the low. We have a double distribution profile overnight, very clear, with a VPARC shift to the low, and the market is now looking kind of heavy. The 28.78 area, is the dividing line for this morning, so we're keeping an eye on that. That was the IB low as well. Remember, we tapped that twice yesterday, right there and right there. Okay, so keep an eye on that. That's the over underline this morning, 28.78. Now, what have we done in the bigger picture? We have broken this channel yesterday. This is yesterday right here. We're in a nice little channel selling lower highs, lower lows every day. And then yesterday we popped up above, and the expectation, of course, is for this to be a balanced day, for this to consolidate probably one more day, and then for us to start making our way to 29.17.5 to the all-time high. Today, however, it is turning over, and it's coming back into this channel. It puts me back on my heels a little bit. Gonna watch to see how the market responds. But overall, when we look at, okay, what have we done in this whole area? Let's draw a profile from the last open gap. This is basically how the volume is distributed. The important price that I pointed out yesterday on the break higher was 28.9750, nowhere close. We have multiple distributions, multiple areas that we've been trading in. If I bring this in to look at what we've done since the high, we are trading right in that 28.80 quarter area. The point of control down here, we're very close to that. Yesterday we're stuck at it, and we're hanging out below. So this looks to me like it's a drop pullback. This is a pullback for continuation lower and back into the channel, at least in the short term. So that's how things are shaping up. To finish this up, what have we got today? We've got an open auction. We've got a market that is out of range. We have a gap below. Okay. We are inside of this very beautifully balanced day. Okay. The expectation, because of that, the expectation is, again, for an open auction, not expecting it to be violent or anything. I'm expecting it to be responsive. I'm looking for it to push back into 28.78 for a rejection and an impulse down. Once we test up, consolidate, and then start to drift lower. There are quite a few stock zones in the area. That's what I'm expecting on scenario 1. Continuation. It's looking terribly weak overnight, and I'm expecting that to carry through. The buyers just could not hold higher prices yesterday. I mean, the test up to 88 and a quarter was very, very, very poor. The secondary scenario is an open auction that tests down, brings us into the low of 28.65 into that stock zone, bounce up. So we break the low, the last low, 28.65, bounce up, and then I'm looking for it to revert back and hold steady right on top of this 28.78 area. Scenario 2, we are out of balance to the downside with a recent downtrend. There's a strong probability for scenario 3. For scenario 3, where we see strong selling coming in. So scenario 3 is cyan. So in this scenario, I'm looking for for a quick push up, just like 1, but more of an open test drive, consolidate, and then I'm looking for a trend down to ensue, bringing us down to 28.58 with no real push up. In other words, a very shallow attempt higher, does not attempt to get to 78, basically 76 or so, and then a strong move down, looking for about 19 points to the downside. Those are the plans for today. Just remember, we're not out there making waves to surf on. We're waiting for waves to be formed so we can surf them. The difference between someone's attitude about having action all the time in the markets as opposed to waiting for things to set up to take action, that could be the difference between consistency and inconsistency, in my opinion. So just practice waiting for clues, practice looking for an edge, and then we're always trading on probabilities, and the outcome's always 50-50 no matter what you do. Good luck today. Take care.